Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, we're kind of in a precarious position here. Taking a look at the charts, we're in the same place we were 13 months ago.
Yeah, we are. And you know, we spent all of last year with kind of a setup, you know, that put the market in kind of the precarious position that it is now. If we could, I hate to use the word digress, but paint some broad strokes here. And kind of how we got here, I guess, is where I'd like to go with this maybe. You know, first of all, I want to say that, you know, intervention always makes matters worse. When you try to negate or control or extend, prevent a cycle from its natural rhythm, then it always creates bubbles and unintended consequences. And then when you try to prevent the bursting of the bubble, which is kind of where we've been, you know, that even makes matters worse. So it's just, you know, like, you know, you can't stop. It's like, you know, the heroin addict. You have to keep pouring the drug to it so the market can have its fix. But you just keep extending it, the inevitable. And an example of this that we can all relate to, a true bubble, was 2007. And then it was more in housing and commodities than it was in equities. But following the bursting of the dot-com bubble, the NASDAQ bubble in 2002, we got into this environment of more so trying to manage the economy, which led to that liquidity-driven bubble that drove prices up into the 2007 top. And during that time, I said that, you know, it's only making matters worse. Recognized it for what it was. In interview after interview, said that we are still going to go below the 2002 low once that cycle turned down, and all it was an extended cycle. And so that is a more recent example that most people have already forgotten about of a real bubble where, you know, it did pop and it did have unintended consequences. But then what's really crazier when you think about it with a semi-sane mind is that following that, the bursting of that bubble and what led to, by the way, the managing of the economy and the housing bubble and all that, all of that led to the worst financial crisis since the Great Depression. But then following that, what happened? It did more of the same and had blown it up into an even greater bubble. This time it's not so much in housing, commodities. I mean, oil prices are relatively low historically. And this time it is in equities. And, you know, when Trump, before he took office, he acknowledged the bubble, talked about it. Well, now, all of a sudden, since he's in office, it's because of him. The market's blown up to even a greater bubble, and he's jawboning it, taking credit for it, which I think we talked about that before. I think that was, I'll just leave that alone. That was either a dumb mistake or it's by design one. I don't know which. But this time, again, the bubble is mainly in equities, and the market is, like you said, here we sit in a very precarious position. We're at the same level we were 13 months ago, I guess. I'm looking at a chart now. And here we are. So we spent all of last year with this higher degree setup, and the danger is that now we're in a spot where, things can change. The thing with every bubble, it's never survived. Every bubble has always popped. The current situation is, it's artificial. It was liquidity driven. There's no example in history you can point to where a bubble doesn't inevitably come unwound. And so it's in this case, I say a short-term phenomenon. It's a temporary phenomenon that we're where we're at. But one of the problems with the bubble is that nobody even recognizes it's a bubble. It's gone on so long that everybody has forgotten about '07. Everybody thinks that everything's okay. That everybody perceives this as a normal environment and that nothing can go wrong. And then, to your point, here we sit at kind of a precarious spot where we have, in my world, we have seen a 4-year cycle top. We have seen a Dow theory primary bearish trend change. And then since then, we've seen this counter trend rally, which has just put the sheep right back to sleep. And here we sit. So this is a test for the market and the ability to control the market. And it's a very, very risky position that we sit in as we go into 2019.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening in the U.S. equities market?
Well, like I said, with the big picture painted, we've had what I think is more than likely counter trend bounce out of the December low, and it's kind of put everybody back to sleep. This is like I said, the great test. I tend to think that we've seen the 4-year cycle top. We have the Dow theory primary bearish trend change, and I think this is counter trend, which means we should ideally go lower. So at this point, we need to see sell signals to cap this. Until we do, it is intact. Today the market's down a little bit. I don't know if we're going to get sell signals or not. If we do, then it's an opportunity to cap the counter trend and for things to resume.
If things resume, are we going to see, again, I talked about a step down where you get a nice rally and then the next 3 days it's down, then a nice rally, it looks like everything's okay, people throw money in, and then it goes down again. Is that the cycle that we're in?
I think it is, but at a different degree probably than what you're thinking about. If we turn down here, I think we're going to turn rather harshly. And then I think we'll see that step down type thing that you're talking about start. But this is a fairly risky spot here. Again, though, can it, and this, I'm not talking on both sides of my mouth. I mean, I recognize it for what it is, but we have to see, as of this conversation, I don't have a sell signal. Now, I may get one tomorrow, maybe next week, it may be 3 months. I don't know. But when we do, if this technical landscape hasn't changed at that time, then I think that we could see, a little bit of a surprise to the downside.
I recall just over a year ago, you said it wouldn't be a bad idea to go into cash because we don't know what's going to happen with the markets. And if you would have done that and had a decent interest rate, you would have made money instead of being in the same place as you were 13 months ago.
Well, one thing about that, and I mean, you can pick and choose the stocks, but here's one thing about that. You know, we saw as we were going into this top, we saw the market thinning. In other words, if you look at, of course, the Dow and the S&P, we beat that to death last year about how they were the holdout. They continued to push, and, I think if I remember right, the S&P made a new high in September, and then the Dow followed. I think it was October 3rd was the new high. But throughout that period, other indexes and sectors in the foreign markets and so forth, I mean, they did not participate. So there was a thinning of the market during that period in that topping process. So, yeah, I mean, that's probably correct. I mean, some stocks have been hit very hard, and some have not. And so it's the topping process. And there's, I remember Richard Russell one time called it the top out parade, and that's what we've seen. It's been a top out parade. So yeah.
Well, Apple a year ago was a huge darling, and it has lost a huge amount since then. Absolutely,
and some of the other high flyers are in the same boat. No doubt about it. Absolutely, and I think, like I said, I think that if we get this next sell signal and nothing changes technically in the process, then we're going to see a lot of stuff play catch up with the leaders.
We'll have more with Tim Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, is oil going to pick up or slow down again?
I think it's going to slow down. I think we have some higher degree cycle lows coming in oil and the commodity complex a little later this year, I think. It was ideally due in a perfect world in December, those higher degree lows, which is where we got the intermediate degree low that, where we've seen the recent bounce in commodities. And when I say commodities, I'm talking not just oil, but, the CRB index. But I don't think we're there yet. I think there's another push down with commodities into those higher degree lows, and then they're going to bounce as well. I think everything will come up out of those lows, equities included, and that's going to be part of where the stair step, okay, that was ugly, but now it's over type thinking will begin.
People are much more aware of gold recently. Is gold going to pick up?
Gold has had a very nice rally out of its August low. Granted, we had intermediate term buy signals, I don't know, way back when in August, September, whenever they occurred. And we knew that it was an intermediate degree low, and actually it was even a one degree higher, low. And as of now, the intermediate degree advance is still intact. We do have some short-term signals on gold. But I do think it's counter trend. The technical damage that was done, in looking back at history, everything indicates that we do have the 9-year cycle top, and that we do go lower in gold. Now, it doesn't mean that it necessarily has to collapse, but if we've seen the 9-year top, then it just means that we go lower to maybe this is a consolidation period. Maybe the remainder of this 9-year cycle is nothing more than a consolidation period for gold for, the move that all the gold bugs have been looking for. Now, like I said, I was really disappointed that we didn't see that final push, washout move into gold to create the 9-year cycle low as it should have. But that low came a little early in 2015, like we talked about. And now every indication is the top's in. So it may be basing, but I don't think it's going a lot higher at this point.
Copper had a nice little bounce back. Will it top $3 again?
I don't know. I don't follow copper very closely, but the metals, and I know people don't like to talk about this or admit it, but if you look at pretty much all the metals, and I do on occasion, I look at, things like zinc and tin and aluminum and lead and all of them, and they do all tend to track to the same cyclical pattern. I mean, sometimes the degree of the advances and declines are a little different. And when I say degree, I mean like they may all nest in a low, boom, 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 and in close proximity with each other, and then top in close proximity. But the degree of the advance within that cycle can vary. And I'm kind of long-winded on that, but the answer to the question is that yes, copper has been in a counter-trend advance as well, or an advance as well, but I think it's counter-trend because all this stuff, these metals, they're all moving to the same basic cyclical pattern. So I think it's counter-trend. As far as the level, I don't know if it'll top $3 or not, but it should top in close proximity with gold. And, I think we're, in a window here where we could see an intermediate degree top. So for what that's worth.
Tim, anything else you wanted to throw in today?
That's pretty much it. Well, actually, yes, I would. I mean, very seldom. Every now and then I'll plug my letter, but let me say this. I have painted some very broad strokes, some detailed. When I say broad, I don't mean broad. Maybe that's the wrong word. Big picture, in a series of these research letters in September, October, and then the January letter. Some very, very detailed stuff, roadmap type stuff of where we're at, where we're going, what to expect, why, details. So that's available in the letter. And as far as watching the setup, I'm covering all that with the signals in the short-term updates. So it may be time for people to consider some hard facts and detailed information in the letter.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.